Welcome back. Hopefully, everyone is doing pretty good. Hopefully, everybody's chasing impact. Um, and all these nice things, right? But yeah, I'm just here to make a quick, short video. Hopefully, it's gonna be short, concise, and direct, right? Might overspin and over talk, right? But that is still yet to be seen. I'm gonna try my best to keep this simple and direct, right? And I pretty much want to talk a bit more about navigating all-time highs, right? Trading within these specific conditions, right? Because one thing we need to understand, guys, is these markets, right, are initially designed, right? One thing we need to understand, right, about these markets is the fact that they are initially designed, right, to capitalize on everybody's psychological disadvantages. And what I mean by this is opportunity is where everybody sees a problem, right? That's why they'll tell you, right? Bad news is always good news, right? Bad news or any form of news is always a distraction from the reality of something. You understand? And the minute you understand this, right? I'm trying my best to avoid being all philosophical, right? And political, because I don't really pay much in regards to that sense, right? But I'm just trying to explain the reality of this market, right? True opportunity, right, is where everybody is blind. It's what initially everybody's blind to. What I mean by that is when we all think the same, right? Understand that is not the right way to think, right? When you're in a place where everything is the same for everyone, that is the wrong place to be. Why? Because that initially it tells you that we are all, again, avoiding all forms of theories and conspiracies, right? We are all digesting the same drug. You understand? The same addiction, the same trait, the same lifestyle, the same philosophies. You understand? And the minute you can initially identify these traits, right, and truly identify them, right, that's your one-way ticket, right, to trying to separate yourself from all of that, right? And the question is, how does this initially relate with the markets, right? Guys, these markets are true and clear psychology, right? As much as we can say they're all based on economy and all these external things, right? Those are in fact true, right? But understand that every single fluctuation is based on the psychology of individuals, right? That's why Bitcoin, right? I don't pay really much in regards to it, right? But understand that the opportunity that was present for it, right, was only present because there was only a specific selected amount of individuals who were exposed to its info. And what that simply means is there was some form of internal, right? Internal influence that selected individual had and understood or were informed by. That's why there was true opportunity, right? For someone to tell you right now that they're still expecting Bitcoin to go 1,000,000 points or whatever, right? It's simply unrealistic. Why? Because firstly, you're late. You understand? Secondly, true opportunity is when nobody's able to identify that. That's where the true opportunity is, right? That's why I keep saying, if you are doing the same thing as everyone else, you most likely doing the most incorrect thing. You understand? Right. And if you really pay very close attention to these markets, right, one thing you will understand is we're currently within an all-time high, right? Just after sweeping just a few months ago, right? And if you're in the group, you'd understand that I told you guys that immediately after the last year all-time high is swept, right? I believe this is the December high, right? Just right after this is swept, understand that I am expecting price to further continue bullish, right? Expect price to be a continuation of that because after liquidity, right, it's always to liquidity and through it. You understand? That's my philosophy, right? That's my initial belief, right? Most people, they say after we see liquidity, expect a continuation. I'm completely going against that idea because firstly, that's what everybody believes. That's a problem. You understand? I'm not trying to challenge anyone's beliefs. I pretty much don't concern myself much about it, but that's initially how I am initially visualizing the markets, right? True opportunities when everybody, right, is just sitting ducks, right? So this thing is just continuously trying to press higher, right? It's trying to press high. It's continuously spooling to the upside. Retail traders will tell you this thing is overbought, right? This thing is in an extreme premium. This, that, and yada 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 yada, right? Though that is true, right? Understand that you being in this specific price levels does not initially enforce price nor the algorithm to now abide by that logic, because dynamic premium and discount, or any form of discount and premium logic, right, is just it's just a visualization of static and consistent price distributions from a volume perspective, meaning how much, right, is price algorithmically allowed, right, to go this specific direction or the other one. You understand? That is initially what it is. If it doesn't have any other external influence that is time, price, and volume based, right, it is of no concern. Why? Because it's not initiating something. It's a hint for an upcoming opportunity, but it's not the do or die. You understand? It is not the do or die. With it alone, it doesn't mean nothing. I sound really passionate in regards, right? But yeah, as long as this thing, right, is spooling to the upside, the way you wanna obtain consistency is understanding that you are trying to avoid what the masses are doing. And 99.99999% of retail traders are looking for shorts here, meaning everybody is looking for shorts here. They are getting burned. You understand? Why? Because that is the most obvious thing. That is the most obvious opportunity to capitalize on. Everybody getting burnt because everybody is thinking the same thing. You understand? It's like internally we are programmed to believe that it should reverse. That is an opportunity that they are able to identify and capitalize on. You understand? It's very hard even for specific individuals, right, to initially overcome this mentality because they, firstly, I would say maybe hard-minded, or they too attached to a specific concept, no idea, right? And at the same time, that can be very toxic, especially if you are too attached to the wrong information, right? It's not going to open you up to the opportunity of learning, right? Which is very problematic, in my opinion, because you pretty much always going to be a forever student of the markets, right? But yeah, to initially reduce on the renting, right? Okay. For the past few months, right, within the group, I told you guys that we're further bullish, and we had specific traits, right? Where by now price around April, right? April this year, right? We had price initially draw to the historical April, which was last year, the first 2024 April, right? Initially dug a bit too deep into it. You understand? And then further spooled to the upside, right? Meaning it created large mohawks, right? It created a large mohawk, but this was the PDA that we were initially expecting price to spool off, right? And in all reality, that's what it initially did, right? After creating a really, really large, right, offset imbalance. If you start taking this candlestick, this one right here, right, and then start multiplying it, right, especially on NQ, start multiplying this candle statically, right, you will notice that it hit a specific, I'm leaving this for you guys to check, right, it hit a specific standard deviation, right, and further spool to the upside, because that's what initially price will do. If you understand time-based candlesticks, you understand that if price is going to refer or go through a specific PDA, understand that it's drawing to another one, meaning the amount of volume that is initially present for a specific direction is way more significant and way more than the current PDA that's in closest proximity. What I mean by this is we can easily say this right here, right, is a 9:30 candle. This is 9:30 p.m., right? And then this is 9:30 a.m., right? Price easily cuts through this because it has less volume, right? It has less influence, or it doesn't have enough influence, right, from a volume perspective to initially hold price, you understand, to initially enforce price to continue spooling to the upside without creating this large mohawks, you understand. The reality is also in regards to this, right, you are always gonna need to understand that that is going to be a constant reality of how these markets are booking, right? You're always going to be exposed to these uncomfortable situations, right? And the goal is not always going to be for you to be perfect at them, right? I learned that I learned that a very long time because I'm a perfectionist in a way, right? Meaning I like things being perfect, right? But fortunately in trading, you don't want to hone too much into that mentality. Why? Because firstly, it's going to break you. Why? Because you are going to try to continuously try to overlearn things, right? And the problem is with that, it's going to lead you to trying to consume too much information that long term may be completely useless. Why? Because you can't efficiently and effectively implement them because you don't understand any. You don't have experience with any of them, right? You just have understanding. You know what they are, but you can't implement. That's what I mean, right? So with this initial information provided in hand, right, we understand that price right after drawing to the PDA, right, which is April, right, creating a mohawk, going deep outside, right, and then you do a standard deviation of this. Start duplicating this statically to the upside. You'll notice why price reversed today, right? This was the first initiator of the yearly move, right? This is the low of the year. For price to come back down here, right, there's gonna be some crazy things that would need to happen externally, right? Black swan events, right? Manual intervention, those types of influential events, right? This for me is a clear direction of a distribution, right? This is the initiator of the yearly move, the yearly expansion, right? And that means anything, right, that I'm gonna be looking for within this upper portion, right? Anything above, right? No, anything, right, above this PDAs will initially indicate to me that I need to be looking for ones that align with the long-term overall price distribution. And anything that's opposing to that narrative is identified as problematic. Later in this video, I'll explain to you guys what I mean by that. Because a problematic PDA does not mean a trading PDA, right? So currently we are within the year, not the year, the month September, meaning this current candlestick, right? This current one, that is September, right? We only have so much candlesticks to refer to because this is the monthly time frame, by the way. We only have so much candlesticks to refer to. It's rather illogical for us to be referring to any lower PDAs, right, for some form of an influence, right? I can look for a symmetrical September from last year, right, to expect a reaction of. It's way down here. It's not in close proximity. I can't refer to that. I can be looking for close in proximity semi PDAs, right? Which would be initially the idea because you win the symmetrical one and the most influential one is not present, right? You need to understand that your next best thing is going to be semi-symmetrical, right? And what I mean by that is September, right? If you start skipping a month, going back, right, you'll understand that the semi-symmetrical month of September is July. Skip August. Then after July, it's May. After May, it's March. After March, it's January. So 1, 2, 3, 4, 5, 6. You understand? These are semi-symmetrical months. That means if you can't find a symmetrical PDA on the monthly time frame, which is a symmetrical month, you need to start referring to the semi-symmetrical ones. You understand? And the closest in proximity one, not the first one that you identify, the closest in proximity, that is going to be the most important one, the most lucrative one, right? Your main peak focus, your main point of interest. You understand? And if you look where this current month is, right, you only need to skip 1 month and look back. You'll notice that September, if you skip 1 month, right, you go to what? August. After August, it's July. So if you skip August, it's July, right? And with July, you'll notice that July is a semi-symmetrical month of September. What does price do? It opens, right? Spools to the downside and then reacts, staying or specifically opening above July's true open. That initially tells you that this whole entire month, right, is supporting higher price, meaning the most logical thing, right, and the highest probability thing that you'd want to do, right, is tell yourself that I am going to be bullish for this given month simply off the fact that July, which is the semi-month, is bullish, right? And it's the closest in proximity month to September, the most influential one currently, right? Now that's your base blueprint. That's the first thing you're having in your head, saying, look, the monthly time frame, there's the PDA price is initially reacting off or likely to react off. Just right off this, I need to start refining. Anything that I take on the low time frame, if it is long-term based or daily session based, right, it needs the easiest executions are going to be the ones that align with the higher time frame direction, right? This is a monthly bias. Just off this, you are good for a monthly bias. You understand? Now, if I further refine this, right, and go straight from the monthly time frame to the weekly, this is initially the 2 months that we are referring to, right? July and September, right? This is week 1, week 2, week 3, week 4. Week 1, week 2, week 3, week 4. You understand? That is initially what it is. This week is symmetrical to that week. This week to that week. This week to that week. This week to that week. You understand? That's the first thing you're going to be paying attention to. That's the first hint. Any other week that's within any other month that's not within a symmetrical, that is not within a symmetrical month, right? You want to make that your last focus before the most crucial ones. Because weekly PDAs that are going to be more influential are going to be the ones within a symmetrical month or the ones that align with a monthly bias or a monthly PDA, even if they're not within a symmetrical month, right? Or semi-symmetrical month, right? So if you pay very close attention, you'll notice first week, price opens, spools to the downside. Everybody's believing this is a reversal. Why? Because we are overbought. That's what the masses think. You understand? That's very problematic because everybody, even here, everybody's looking for lower prices. You understand? Avoid trying to look for reversals with an all-time high because you're going to be wrong 9 times. And then the 10th time you're correct, you're just making back everything you lost being incorrect, right? The first ones to always partake in this significant moves are going to be the ones that get hurt the most. You understand? Especially if you don't have proper experience with this. No one, right? No one is ever going to tell you when the reversal after an all-time high is going to begin. You need to refer to historical data that the move needs to initiate itself beforehand. You understand? It needs to initiate itself beforehand, right? So what do we have for this current month? Price opens within week 1, spools to the downside, revisiting a symmetrical week 1 of July within the semi-month, right? This is when the bullish move initially begins, supporting higher prices for the month. You understand? Of the alignment of the monthly time frame, right? And the weekly time frame. If you're a long-term trader that holds trades for months, if you're trading synthetic CFDs and all these things, right? You can easily hold this. You can easily utilize this as a trade execution, right? That supports higher prices. You understand? And just be done for the month and hope that basically this is how you align yourself with long-term investments, right? Not financial advice. On your demo account, right? Initially, this is when you try to partake within long-term swings on your demo account, right? You don't need to overanalyze, over-refine, because sometimes you'll also be losing unnecessary trades by trying to be too perfect or trying to over-refine, because that's going to lead you to make unnecessary mistakes that will compromise your results. Simplicity, the minute it becomes confusing, right? That's when you need to understand that you're probably doing something wrong. You need to learn to be aware of this specific traits, right? So in this case, right, what does this hint, right? For me, this initially hints that if I am bullish, right, and I'm expecting higher prices, right, the monthly time frame is bullish. The weekly time frame is bullish. And any PDA that's above this specific week, right, whether it's a semi-week or anything, right, I'm regarding that as a problematic PDA, right? It's a problematic PDA in the sense of I am expecting it to fail, but I understand that it can be the reason why the execution or the direction I'm looking to see price head to, right? It's less likely to happen. You understand? But I still partake in the trade. Why? Because you're always gonna be in a situation where there's problematic PDAs. You just won't be able to identify them always. That's initially the reality of it, right? You're not always gonna have the luxury of being able to do that, right? And this initially means, right, if you pay very close attention, right? Yeah, I just wrote this, that problematic PDAs is not a trade. It's a signal to observe, right? Not to act. Confusing noise for opportunity is how most traders fail. You understand? The minute most people, right, especially the ones I would say understand time, price, and energy, right? The minute they identify problematic PDAs, right, they always see these things as stepping stones. And what I mean by this is they will see the specific PDAs as the reason why price is less likely to go higher and trade against that idea. You understand? You're not going to be consistent of that because you're just reacting off one single PDA that does not have much narrative, but just being a problem. You understand? You need structure, you need foundation. You understand? You need to be taking notes. You understand? You need to be taking, I'm not going to open it, but yeah, you need to be taking notes. You understand? Checklists. Like I tell you guys, you need to be taking a checklist, right, to keep yourself structured. And anything that doesn't align with a checklist is problematic. It's not a trading opportunity. It's something to observe and identify and study, not react off, because you're going to get hurt reacting, right? For example, this right here. This is week 3, right? 1, 2, 3, right? 1, 2, 3. Price opens, touches it, aligns with itself. Understand? This is week 2. 1, 2, 1, 2. Price opens, reacts off this, spools to the upside, right? Now, look here. Notice this candlestick, right? This is week 1, right? Week 1, when it initially opened, it was not in sync with the monthly buys, right? And what I mean by this is the first PDA, right? If you look at this right here, right? This week 1 from the semi-month, right? Excuse me. That's right here. All it initially did, right, was open. Also with week 3, the two of them being aligned, right, was initially opening, allowing price to wick to the downside. There's 2 PDAs, week 1 and week 3. Were initially influencing this week 1 to go to that one. And the minute price gets there, it doesn't have to respect this one and that one. You understand? They were initially initiating the move, meaning they were catalyst within the Judas swing, right? They are the reason why you were provided with the opportunity of getting a Judas swing, meaning a direction that doesn't align with what you're trying to see, right? That's my initial perspective in regards to that, right? A direction that doesn't align with what you want to see, right? But instead is behaving, right, as the first stage confirmation for what you initially want to see in regards to an outcome, meaning it's drawing to the PDAs that you'd want to use, right, to initially take an execution on your demo account, right? So, guys, I'm gonna also try to avoid overly complicating this by making it too extensive and too overly complicated, right? I'll be teaching you guys this in increments. Most of you guys already know this. You're just not implementing it because, I don't know, maybe routine, psychology, or experience, right? Something is standing within the barrier of you and honing your focus and your ability to implement things because you have a lot. Basically, you are exposed to a lot of noise and you need to learn to organize your approach, right? Your workflow, your thought process, and everything. It needs to be organized. If it's too scattered, you're not going to be efficient. Guys, the most important thing within this industry, right, is performance. Personal opinion again, right? It's performance, right? The minute you are able to be consistent at being at your highest level of performance, right? That's when you grasp true consistency. You understand? That's when you become truly consistent. Why? Because you're doing the correct things consistently. Everything else just becomes a side effect of that. Understand? So now, from going straight from the weekly time frame, right? If I now quickly zoom in, right, from going straight to the weekly time frame, you will notice that this was the first week, right, of July. This is the first week of September. Like I said, price opened, drew to the downside, utilizing this and this to draw to the downside. Now it's spooling higher. We're now still within an all-time high, right? There's no PDA for us to refer to right there. Why? Because price is right here. That means for price to be fluctuating and moving within this range, it needs to be referring to the most recent data. You understand? And this is all you can refer to. You understand? Price opened this week, right? It opened pretty much right there, and we pretty much say it's been bearish, right, for the first half of the week. And what I mean by that is Monday was bullish, and then today, which is Tuesday, right, was bearish, right? This is last week. This is the current week, right? If I now begin to go to a low time frame, right, which is the daily time frame, right, this now becomes Monday. See, 15th of September. Tuesday, Wednesday, Thursday, Friday. This is Monday the 22nd, right, which is just yesterday for me, right? This is Tuesday. You understand? Everybody here, guys, is looking for lower prices. Well, let me not even say everybody, because somebody's going to be trying to fight me and say I'm not. But that's not the point, right? The masses, right? You might be the exception. Hopefully you are, right? Is looking for lower prices. You understand? It's way too predictable. That's what I mean, right? That's why it is an opportunity for many, right? When everybody is looking for the opposing direction, the clear direction, understand that that is the lowest probability. That's the lowest condition. That's the worst condition or position that you want to be in. It's not lucrative. It's not consistent. You understand? Once in a while, it's going to work, right? To keep your skin in the game long enough to actually lose a bit more than you initially thought you would, right? But yeah, guys, I'm saying on the monthly time frame, I'm bullish. Weekly time frame, I'm bullish. That means even on the daily time frame, I need to be selecting daily PDAs that align with that narrative. It's Monday. There's a reason why Monday was bullish. Last week Monday was way down there. It could way down there. Tuesday, down there. Wednesday, Thursday, down there. Friday, up here. You understand? This is Friday, right? This is Monday. If you understand, Monday, Wednesday, and Friday, these are semi-symmetrical days. Always skip a day when you're doing your calculations in regards to how you understand which specific days are semi-symmetrical. You understand? Monday, Wednesday, and Friday. That means if you're on a day which is Monday, if price can refer to a Monday candlestick for a reaction because it's not in close proximity, it's going to look for Wednesday. If Wednesday is not close in proximity, it's going to look for Friday, right? If neither of them are in close proximity, that's when it's going to refer to sessions from historical days, because it is still allowed to retrieve internal macro times within this lower days, those time frames. Anything below the 25 hours, right? We initially want to regard as macro cycles, right? Macro cycles, even though some are session based and all these things. Understand? But yeah, guys, to initially keep this a little bit concise, short, and direct, right? You need to be consistent in regards to how you want to operate and understand that if you are going to be trying to think like everyone else, right? You are going to get hurt, because true opportunity, right, is when everybody is looking for the same thing. If everybody believes, right, that crypto is going to crash, do you think that's really going to happen? If anybody believes that the rates are going to get cut, I was hoping that, do you really think that's going to happen? You understand? That's initially how it is. That's how you'll have specific fundamental traders tell you that I look at data online like Twitter to see what the masses are thinking, and I do the complete opposite. because I understand that's what the true narrative is, right? But yeah, without the ranting, guys, hopefully you found this insightful, right? I'm gonna try doing a bit more in regards to this, right? A bit less too advanced in regards to technicals, right? I'm gonna try keeping things simple, stupid, but highly strict in regards to routine, right? Because routine and performance is gonna be the most crucial thing, no matter what model, language, algorithm, enigma, whatever you're using, right? You need structure, right? And you need to be able to implement your routine efficiently, right? The use is just as important as the tool, right? That being said, guys, you guys have a good one.